The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. The S&P is currently up 6.75. We got the Russell up 10.5. The Nadex up 19, and the Dow is up 47 points. Looking on over at the metals, we have copper right now is up nearly 1% on the day, so moving pretty good for a Friday there. We got gold up 0.3, and silver, down 0.3, and silver's down about 0.5%. Natural gas, pretty quiet for a day, less than 1%, which it's a 2 to 3% mover. So really light day there on the energies. We got oil currently up 61 cents right now. Looking on over at corn and soybeans, corn is completely flat. I mean, it's up a tick. We got soybeans down a little over 4 points. Euro dollar's down 29 pips. Aussie dollar is up 12. Pound dollar is currently down 49. We got the dollar franc is up 15. The dollar CAD down 28. Dollar yen up 29. Aussie yen up 34. Euro yen is up 9. Pound yen is down 22. And the euro pound is up 8 pips. All right. So that gets you caught up right now. Let's see here. That gets us caught up on where all the markets are at. And yesterday we went over a couple news trades, so I wanted to walk through those with you, look at them, and just maybe help you, again, try to put the pieces together. So once you get all those pieces together, then it gets a whole lot easier to do it. And obviously, like with anything. So let's pull them up. I had basically 2 potential trades for the day. And let me get that on up here. And, we had a couple cool trades. I did a pound dollar as a premium collection trade. It went right against us. Got out with $25 loss. But also had an Aussie yen that we went short on. We had like a $125 profit. So, net $100 on the bull bear binary hour. If you were following along with us there, trade went well. And live trades. I like to do, some live trades with y'all and, make it real, not just theory. And let's see here. If we go in and we'll look at the dollar CAD. Okay. We'll pull that on up. And I got to figure out of my 5,000 windows that are open. Sure, none of that y'all ever have that issue. But let's see. The good and the bad thing about tabs, right? You got all these tabs, and they're great, and it makes it where you can get a whole lot of windows in one thing. But then when you try to find the one thing that you want, it's like I need a search feature. Here we go. Okay. And what I wanted to do is I wanted to pull up the charts on there to look at the pricing. So like what we were doing yesterday. And almost there. I'm about to just re-log in if I have to. Because I'm like, it's somewhere around here. And let's see. All right, yeah, that was definitely the easiest solution. Okay. It basically just kicks me out and lets me log back in, and then we go through round 2. And I also wanted to teach you something I learned the other day. One of our traders taught me, and I guess it's a new feature that they put in the platform, but it's really handy. If you have any open tickets, you're not sure, you didn't know that you had them open, whatever. You can go over here on the Nadex platform, and you can click tickets, and it'll just show you any and all tickets you currently have open. So if you have out-of-ticket windows, like a tear-off ticket over here, and I have this off to the side, it's under screen, and I'm not sure, there it is, okay? I can click that, and it'll bring it right to the top. So very, very helpful feature. Nice upgrade. Another upgrade they did that's pretty cool is under the account tab, you can go into the settings, and they have under the preferences, you can now go in and you can set a default size. So like I have mine set to a default of 10. So now you don't have to manually enter 1 every time you open a contract up. Obviously, you probably want to turn on allow multiple order tickets and set it to 12 hours for session and activity. As long as you're at your home computer, you feel it's safe. Then that's a setting where basically it'll stay logged in. If you have it at 1 hour, it's going to log you out after an hour. So, but anyway, so you have those little things that you can use. Flashes, like if you want better performance, you can turn them off. It won't flash. If we go over here and we hit, set, then what will happen is you won't see the price change. I really like to see that because you sort of don't notice when it's changing otherwise. Whereas if I set it, turn it back on, then as the price changes and goes up and down on any market, then you'll notice the colors changing. But anyway, so check out those preferences. They've added a couple new ones in there on the ticket feature. Appreciate that, Mark, for pointing that out to me the other day. Anyway, so looking over at the pound dollar, and let me pull up the contracts on the spreads, or not pound dollar, dollar CAD. And pull up the dollar CAD there. And let's see if we can also go in here and with that, so what we'll do is I'll pull up the 7 to 3s because that's the main ones we can really look at the contracts for. Let's verify the price like right when the market opened up. Let's see where it's at right now. Actually got a nice sell order right there. But let's check out where it's at. It may have moved quite a bit. Let's go on down. We're down about 38 pips. So now the question was, what kind of premium could you have got for it at that time? And I'll open up 2 charts. Let's see if they're even lined up. 1.0910. Yeah, that's actually perfect, so it should be. And so right over here, we have the price 1.0921. Wow. So you're talking. Let's see if they fixed their bid-ask issue yet. I know I turned that into them yesterday. Not yet. So if you look at just the open right there, pretty much at 7 o'clock, we're looking at 1.0921. So what is the bid-ask spread on these? About 3 ticks. So 1.0922. If that's a mid-price for a sell. Or no, actually 1.0920. So you're only talking $10. Let's look at the other side. Let's see what that gives us. Okay. Maybe to straddle. So, one of the things that I'm learning that I'm putting together is I'm a trader just like y'all. I'm not some Nadex rep. I'm here to actually, I've got to figure it out like the rest of you do. And, I grow as I trade, and I try to share that with you on this show and let you see some of the things that I'm learning so that way you can benefit from them. And let's see if we can stretch this one out. Okay, there we go. And what works better when, and that's why I've been talking about the VIX a lot lately. And I've been noticing that really what I'm starting to figure out is when the VIX is much lower, it doesn't mean we don't get enough movement. You just don't. It may not be huge movement. What it does mean is the binaries are a lot cheaper. And so I'm starting to see that there may be a certain time that's better to straddle, because I was straddling for a while and just knocking it out of the park. And then all of a sudden it was like I was just begging to break even. Like on half the trades at least, if not more. And then I went to iron condors, knocking it out of the park. And now it's not that I'm losing on them, it's just I'm not necessarily getting them, right? And I still do both. I'll still look for straddles, I'll still look for iron condors. But that's really what I've learned is you actually really have to look at both and see what the expectations of movement are. High to low, up, down, all that stuff, and just sort of see what is the premium. When the premium's lower, you're more likely to be looking at a straddle. If the premium is higher, you're more likely to be looking at an iron condor. So it's not a which one should I do. It's not which one should I do, but I'm not even phrasing that right, but it's not which one you should do. It's which one should I do, if that makes sense. So it's not like you should do this one. It's you should do this one or this one, depending upon the circumstances, so long as the P&L lines up for one side or the other. And anyway, so we'll get the potential profit on this trade and see if it was even a potential iron condor to begin with. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, let's go ahead right now and let's look at where the dollar CAD is. That's what we were talking about a little bit earlier, and we're going to the dollar CAD trade from their numbers that came out this morning and the results on that. And basically, could you have done a neutral trade based off the news report that was released earlier today? And in the news trading plan, I laid that out for you yesterday, step by step, what to do, how to put it together. So let me go through what the report was, what the results were, and what the plan was. So the results met expectations perfectly on the dollar CAD. 0.2 on a 0.2 expectation for the core CPI month over month, and 0.3 on a 0.3 for the CPI month over month. and no revisions to previous months. So it was a non-event. It didn't even matter, okay? So what about the news plan? Well, the news plan came in and basically said that we really don't expect that much movement on this trade. We're looking probably for about a 30 to, maybe a little more than 30, but often by the time 3 o'clock rolls around, a pullback. So about a 30-pip move or less from 7 a.m. to 3 p.m., close to close. Okay, that's a big piece there, is that close to close piece. And was really the expectation. So I can go over here and I can look at it and go, okay, well, I only want to be able to get $10, meaning if I went in and I sold this for 1.0920 and the floor is 1.0910, that's only $10 I can make. Okay, well, I need to get at least 30. So that's 10. I need 20 on this side for this thing to work out. So I go to this side and I look at it and I can buy it. Okay, this is the lower spread. I can buy it for 1.089, basically 1, and 1.0891. If I go in, and I just want to bring a calculator up so you can follow along, and that's a little easier than trying to remember all the math. But 1.0910, that's the ceiling. And then again, you go over here, and you're going to look at what was the opening price there at 7 o'clock. So the opening price was 1.0890, so add a tick to that because it's a 3-tick bid-ask spread, and we're at the middle of that. So 1.0891. So minus 1.0891 gives us 19 ticks. Add 10 ticks. You're pretty close. You're at 29. Personally, I don't like close. When I tell you 30, that's really my minimum. Okay? So it's 30 or more. You might be able to get in there and pull it off, though. I mean, is it oscillated up or down or something like that? You might have been able to pull off 30. So if you did, let's just assume you did. Then right now, as of this moment, let's go in and get as precise as we can on this. Okay, so right here, we'll go to the 7 a.m., get right on the 7 a.m. open, because the way that they plot their bars. It ends at, let's see, current bars to make sure, because I get between so many different platforms, it's easy to, okay, so they're actually plotting the close of the bar. So 70 minutes to close. All right, so that's going from 60.55 to 7. So we go right there, and then we take it currently to where is the current market price. Currently we're at 37. So let's just say you took the $29 trade, even though I said 30 or more. Then right now you'd be down $7. Okay? And that's doing nothing. That's just putting the trade on and walking away. Be down $7. And then as it oscillates back up, if it does, which is what I expect, then for every tick, basically it is above that 30 pips, that's $1 you'll collect. So if it ends up right in the center, you'll get all 30. Okay? And but if it goes down below the 30, I lose $1 per tick. So it's not highly leveraged against you or for you. It's just meant to be a very simple way. Now you can do 10, you can do 100, whatever. So you may have to step into them. I mean, you're doing premium collections, so you're not trying to hop out in a heartbeat. But so that's not horrible. Right there, about 30 pips. And also, you can look at the 8 to 10 right before the news release came out. Sometimes it'll do a volatility spike or volume spike that you can look at to see if there would have been one there on the core CPI. Now, the other one that we were looking at was about basically the exact same trade. It's over on euro dollar. So let's go check out the euro right now and see where it's at. And pulling that on up here. So it takes just a minute for the chart to render over. I'm pulling all sorts of information, tick data and volume data and everything else. And all right, so we'll cover this one when we get back, but this one looks really good. Be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. So now we're looking at this euro-dollar trade setup. Looks like it's about 13 pips off from where it was at 7 a.m. And we usually said it'll stay within about a 30 pip range by expiration, 30 pips or less. So ideally, we're looking for a 30 pip move, okay? 30 pip profit potential. So this morning, really light volatility again. Let's check it out. So go up here, we look at the 36.20. And checking out the open 36.36, 36.35. So that's going to put us right as we're selling that one about 15 pips, okay? On that side, we go over here to the other side. We're going to selling at 36.20. The open's 36.11, so that's going to put us about 36.12. So that's about 8 pips. Pretty similar to where we were on the dollar CAD. Very low volatility built in. What that really means is that there's about a 23 pip expected range, by the way, on the euro dollar from that price, or a 46 pip total, high to low. But meaning if it went up 23 and down 23, but they don't expect 23 pips from the center there. And so, again, if you put it on right now, you actually still would, on this one, you'd actually be profitable at the moment. But, again, it was lower than the $30 requirement we were really looking for. So unless you legged into the trade, which is a method that I've seen a number of traders do, it can hurt you if it doesn't work out, right, because you don't have that extra hedge. But, you can hop in, $15 on one side, it moves, you put in an order 15 on the other side, and you can leg into the condor. I used to do iron condors all the time on Thinkorswim. And I do them, just month after month after month, and I would leg in. So I'd say I want this much for this side, this much for this side, and I would put my limit orders in, and it's pretty nice. It's a great platform. You go in there, you can put in, okay, I want it, this is my order, and when this happens, then I want this to happen. And so I'd have a first triggers OCO, and I'd put in a first trigger limit that was a good till cancel. So it may take days sometimes to fill when I was doing this order. But when it filled, it automatically put in my stop loss and my take profit. And then if either one of those got filled, it automatically closed it out. So it basically took care of the trade. I just put it on. I spent 10 minutes a month, and I was done. And the whole idea here is sort of a similar concept, okay, except for you don't have that insanely massive risk like you had doing those other trades. Is going in and you can still use stops and all that fun stuff, but you go and you put your limit in, and that's wonderful when that happens, right? But you put your limit in there, and then you can put it on both sides, and it may take a little bit for it to fill. You may not get filled at all, okay? I mean, you want to be very aware of that. It just may not happen, okay? And so let me see this. So 36.20 being like right in the center here, and notice how the price on this one pretty much just goes up. I mean, if you didn't take it right there, you really didn't get it. It's pretty much, a couple more times it came down over here. Let's see, what was our lowest low? I think it's the same as the open. 36.11, 36.11. That's as low as this spread got all day long. Okay. So if you had to order in and you were trying to get more money than what it was giving you, let's see, how much did we need? We got how much on this side? We had to open at 36.36, so 15, is that right? 36.35, yep, so 15 ticks. So we really did need 15 on this to really have our $30. So you would have got filled on this side, so what would that mean over here? Because you sold this one, well, you'd be profitable. It'd be okay. So you'd still be up on the trade. And, not huge, but let's see, you would have bought in at 36.35. It'd be like at 36.31 right now. Only up about $5 because you didn't make the money on the other side. Okay, you didn't make the other like $15. So, but that is usually an effective method, especially if there is some oscillation on the news, which happens often. Then, boom, boom, you get one side, get the other side. We're hopping in an hour and a half before the news even starts. So that is a method for your iron condors. It's just one of those things that you got to be aware of, that you may not get the other side, but a lot of times you will get the other side when you wouldn't have a trade at all. So it's that, do I want to miss out on the profitable trades that I would make? Or do I want to, like the trade, basically if I can get filled it would work. Those are the ones that really are like, or do I want to only take the ones that are right there, which is, okay to do, but you're throwing away all the profitable trades. And then what's my cost if I go getting after all those profitable trades? Well, occasionally, sometimes I may not get that fill, and so I won't have that, other $15 of profit potential coming in that can hedge me off, etc. And there's a pretty simple solution. If that is the case and you put it on and you see that it's going against you, you know that the profit one would be covering you by $15. If the price gets up to pretty much where you got in at, you can get out. If the price gets up to where you're basically 1-to-1 down, like you're down 15 pips, don't look at just the profit. Look at actually it gets moved, say 30 pips against you. You get out, so you limit that loss. You'd be break even if you're on the other trade, but it's just one way to do it. And but sometimes it is necessary. I'd probably say on about 10% of my iron condors I didn't get filled at all on one side, and probably about 30% of the ones that I did I legged into. So, which would leave you to, if you look at that stat, that means only 60% would you actually get completely filled on if you stuck to an entry at the exact same price at the exact same time. It's a little more advanced to get used to, but it will help you capture a lot more of those trades that actually can work out pretty well. You just, got to get used to legging in versus hopping in both sides. I mean, you're always legging in, meaning you buy and then you sell, two different contracts. It's not a combined order. But I'm talking about, like, I may put one order in and it may be 15 minutes or an hour until I get the other order filled. Okay? And there's other ways you can do it, too. You can hop in, you can look at the 10 a.m.s, because maybe the 10 a.m.s, like at 8 o'clock or whatever, maybe they have a different strike that you can take advantage of. And so by looking at that strike and taking advantage of that, that could work out well for you in the sense of maybe I end up using a 3 p.m. on the upper one and I use a 10 a.m. on the lower one. And that's okay. You can mix and match them. So, just trying to get you to think through all the different little intricacies. And there's the simple one, buy this one, sell this one, same strike, same time. If price there, then take it. If not, then don't. Once you get that down, so get that down first. Once you get that down, then start looking at legging in as a potential solution. Or you can take it in steps. You can start looking at combining different expirations to get that profit that you're looking for. Okay? So like I said, you might have a 10 a.m. and you might have a 3 p.m. You might have a 9 a.m. and a 10 p.m. So it depends on where the strikes are, where the prices are. But by looking at that stuff and putting it together, and I think it's a little harder to mix expirations than it is to simply leg in. That's why I say I'd start with legging in and then work on the mixing expirations. But use the scanner to help you. It shows you the risk-reward graphs, puts all the pieces together for you, and makes it a lot easier to do all the stuff I'm talking about because you can visualize it. To show you an example of doing this over on the scanner, let me open this up here. It's taking a second. There we go. And I'll bring that up on the screen. Let's see here. It ought to be resolving over here in a second. And it's like right down here. If I go in and choose, I don't know, let's use this pound for a second. And we go down. Oh, let me clear out everything. Then I go, okay, well, let's see. Let's find stuff that's close to this. All right, that one is. What about this one? Nope, that wouldn't be one for an iron condor. What about that one? No. Most of these, there's not going to be any premium minimums. So it's going to be hard to do. Let's see if I can find something. Oil might be a good. Maybe we'll have a 2 and 230. It has usually more implied volatility in it. It's just a really slow day. But okay, so right there, so there's like where you're making the small profit if it stays up there, like $10 in this case. We hop to the other side, so we can find another one that might line up. I don't know if we can find one that does line up. That might be just a middle spread. We'll just start going through the list, see if we find one. See how I'm just able to click right through these? It's plotted on the graph. So this is like profit. This is up and down movement on the instrument, and this is profit and loss based on that movement. So I can go in here. Okay, so oil, no. Again, this is like the worst possible time to look at trying to do an iron condor at the end of the day on a Friday before a holiday. There's little to no expectation of movement left in the market. I just want to get you a combination of two different time frames so I can at least show you the example. Come on. There got to be one in here. We got 4,400. Is there a 4,400 with a different expiration time? And no, there's not. Okay, well, here's actually two different spreads. This will work. So there's a 400-point wide and a 500-point wide. This one started last night. This one started this morning. So here's a case where you actually have two different expirations. You have a daily, and you have sort of basically the longer intraday, the one that starts at 8 a.m., and you have the one that started at 6 p.m. last night. They both expire at 2:30. That's why they have different widths. So that would actually be another level. So you have like same strike, same expiration time, start at the same time, and you get in, you got to have the profit right away. Okay, to get this little, gap up here, that's what you're looking for. The other choice is actually looking at maybe one that started at a different time but expires at the same time. From there, you got the ones that actually expire at different times you could do, okay? That's going to get a little bit more complex. And another level of complexity is you can actually make them where they don't exactly match up. Sometimes there might be a gap in one or the other. Sometimes you might have a little bit of premium in one versus the other. So, but if it does slant to that side, you can make a lot more profit potential on it. So you may not even have lined up floors and ceilings. And then, of course, the simpler method I was talking about earlier is you could just let it leg in on a normal one. So a few different layers you can go into. As you get down just a normal one where the price lines up and the expiration time lines up and the floor and ceilings line up, once you got that down, add on legging in. Also, you can add on looking at, where the floor and ceiling lines up, the expiration lines up. Maybe they start at a different time. And then you can start playing with different expiration times and even different floors and ceilings with the premiums. And just seeing what is the best option available. I mean, they call them options for a reason. There are lots of options. Okay? And but you don't have to start off complex. And I think that's something that sort of gets people as they come in and they do this, and they're like, oh, this is too hard. This is too much. It's like, don't take on all 50 choices, okay? Just get one down. Because once you have the concept down, pat, and it's really easy if you get the simple concept down, it's very easy to go, okay, now let me add on another idea. Because it's not like you're trying to learn 10 things at once. You're learning one thing. And, I grew up on got ranches and dairies and, fields out here where my family's, peanuts and corn and wheat and cotton and everything else. And like I said, one of my uncles has, massive dairy. Another one has, cattle ranch. And my grandfather used to buy and sell cattle at auctions. And I go to all the things with them. And very simple saying is don't eat the whole cow at one time, one bite at a time. Don't eat the whole cow at one time. So you're just going to take one bite at a time. Same thing when you're ordering something new like this. Don't try to eat the whole cow. Don't try to eat Nadex all at one time, all right? One bite at a time. Get down what a spread is, what a binary is. How do you buy it? How do you sell it? How do you do it directionally? How do you do it for premium collection? Okay? Understand one little piece at a time, and it gets really simple. Okay? It's easy to chew one piece of steak at a time. It is not easy to gnaw on an entire T-bone all at once. So it's not easy to fill your mouth and then try to chew it. You just cannot chew it. You cannot digest it. So really to help you out, make sure you just take on one piece, and then I'll teach you more advanced things, but don't feel like you have to start there. Okay? Just do the basics, get them down, add on, and don't let yourself get so overwhelmed you get frustrated, because it is worth it. It is awesome. All right, so what else do we got? Let's check out the news that's coming up here this coming week. We are going to have some parliamentary elections. Be very aware of that, okay? 28 European Union countries will elect 751 members to the European Parliament. So, anyways, that could have some impact on the euro if you're holding the euro over the weekend. And they've been going on, but I guess the final results here, day 3. Final results day 4. Okay, so there we go. So they do this every 5 years. And, it's not like I'm some expert on this. I'm reading it as I go. All right? And then Draghi's going to speak. So he's going to be a big opening remarks at the European Central Bank Forum in Portugal there. So that could also impact the market. So, be aware if you have any positions, you're holding them into a weekend of elections in Europe. If you have any, especially EU positions, and that could impact the dollar. That could impact anything that's in the dollar, like commodities or indices, because they're all priced in dollars, which are also measured against euros. So currencies impact everything. All right, stay right there. We'll be right back here in just a few minutes.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're back here to the Diagnostic Trading Hour. Just looking at some of the notes there on Kurata's positioning on, hey, the government needs to get involved too. It's not just the bank, and that's obvious. So, okay. Anyway, so yeah, we're talking about, making sure you're going through one piece at a time, and we're going through, learn everything as you go. Don't get overwhelmed. Don't try to master the 10 advanced tips I teach you at once. Just get on the basic strategy. But anyway, so Monday, we're going to have a bank holiday. So Britain and in the U.S. as well. There will be FX open, of course, but there won't be as much liquidity. In my experience, it is better not to trade. Okay? Nadex will not be open. So you can log in. You'll see the exact holiday hours and all that stuff. But they'll be closed down Sunday, Monday. Take some time off. I know trading is one of those weird professions where you almost don't like holidays sometimes. Because you're like, oh, man, the markets are closed. You know, that's good. Go get away from your computer, okay? Turn off your phone and just enjoy life, enjoy family, enjoy the outdoors. Get out there. But that's what I plan on doing. But anyway, so bank holiday, Monday, so pretty much nothing happening. But Draghi's going to also be speaking the following morning at 4 a.m., so that's going to impact the markets going into Tuesday most likely. And then let's see what else we got. We got core durable goods orders. Probably not going to worry about that one being the first trade out of the day on a following holiday. We're going to go ahead and put that as a be aware, but due to it being the day after a holiday, I'm not going to trade it, okay? So, not my normal news plan there. We'll also have a couple other things. I mean, Draghi is just speaking constantly, so I'd be very aware that that's going to have, we got to have some good volatility in the euro next week because of that. And consumer confidence also, same thing. Again, day right after the holiday. Bank of Japan governor is going to be speaking Tuesday night at 8 o'clock. So that'll affect the yen quite a bit. We are rolling over to Wednesday. There is nothing trade-worthy at all. Not even the private capital expenditures. Just there's really nothing. So you might want to be aware of the private capital expenditures coming out at 9:30. There's a tentative report on new home sales, but this other information really is just going to be your normal oscillations. I'm rolling into Thursday. You're going to have bank holiday in Europe, Germany, and Switzerland. So let's see, they'll have Ascension Day, and Ascension Day, and Ascension Day. Okay, so there's going to be bank holiday, so that is going to impact the currency markets a little bit, especially Europe, on Thursday. So Draghi's going to get all his speeches in earlier in the week to make that happen. Then we're going to roll around. We're going to have preliminary GDP. That is usually going to be a good report to trade. So we'll be looking at next Thursday having a preliminary GDP trade for you, and I'll give that to you by Wednesday. We'll have, of course, your normal oil inventory oil inventory is probably bumped. Yep. So oil inventory, make sure you update your calendar for that. Next week, it's not going to be Wednesday. It's going to be Thursday because there's a holiday. When there's a holiday, they usually bump it back a day. So, again, bump your calendar back one day on oil inventory coming out at 11 a.m. on Thursday. And what else we got down here? Rolling into Friday next week, we're going to have the Canadian GDP. Definitely be a trade we'll be looking at for a potential trade right there. But really, as far as what do you need to be aware of, there's going to be holidays. 3 different days of holidays next week. Going to be a lot of speeches by Draghi, and that's pretty much it right now. So just be careful and enjoy your weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.